Right, last session of the day, before there's drinks, I believe. So this is all about the deep tech and quantum opportunity. So last session of the day in this room. So deep tech and quantum sit at the frontier of what venture is supposed to do. So back fundamentally new capabilities long before the market fully understands them. They also test the limits of the model. So with long development cycles, capital intensity, and sometimes unclear early use cases. So hoping the session, which Emily will lead today, will maybe look at how investors are underwriting those risks, where they see near and medium-term commercial applications, and how Europe, and the UK specifically, maybe can position itself in what is increasingly a geostrategic technology race. So on our panel, we've got investors and operators who are living that tension between scientific ambition and the hard discipline of fund returns. So, Emily, take it away.
Thank you so much. Hi, everyone. Very glad to be here today. My name is Emily Meads, and I'm an investor at a quantum and physics-focused fund called Quantonation. We're the first physics-focused and quantum-focused fund in the world. And it's my pleasure to be here on this panel with these amazing panelists that are by my side. Before we kick things off, it's always good to know who you're listening to and speaking to. So should we start with a quick round of introductions, maybe just in order of how you're sitting?
Hi, everyone. My name is Stuart Chapman. I'm the co-founder of Molten. Prior to that, I was a 13-year investor at 3i and spent 5 of those years in Silicon Valley.
My name is Joanne Hosker. I'm from Northern Gritstone. We are an investment company based in the north, not surprisingly, predominantly investing in university spin-outs. We have almost 500 million on the balance sheet that we invest in IP-rich businesses across tech, deep tech and life sciences.
Hello, my name is Neil Cameron. I work for Parkwalk. We are an EIS fund, the largest EIS fund in the market, and we invest in UK university spin-outs. That's all we do. We cover everything from deep tech through to life sciences, 130 companies in the portfolio, and we've been going for about 15 years. And we've got a number of quantum investments, which is, I guess, why I'm sitting here today.
Hi, my name is Kirill Pyshkin. I'm not Stephen. I'm sitting in for him. I'm one of the partners of Quantum Exponential. Quantum Exponential is a specialist quantum fund, so we only invest in quantum. Have been doing this for 4 years. We have 9 portfolio companies, all UK. We are a partner, for example, of Hubble Quantum Cluster. That's the home to UK National Quantum Computing Centre, partner of Institute of Physics. We're part of London Quantum Cluster. So we are the fund in quantum focusing on the UK. My background is physics, and I used to be a semiconductor industry analyst and a fund manager.
Thank you so much. Great. So to kick things off today, I think it's always nice to start a little bit broad, right? So deep tech is a relatively recent term. We're talking about 10, 15 years since people started using that word. Quantum is also a relatively young field in venture capital and is slowly becoming a bigger part of deep tech and VC broadly. But over time, the same questions always arise around deep tech. Some of them, we don't know if it's myth or reality, which is it takes much longer than other assets, it takes more capital, you need a big CapEx and infrastructure investment into it. And things have developed, but there's always questions about the fundamentals. So maybe we can start with, where do we actually stand today? Maybe looking at 5 years in the past and compared to the global scene. Where are we today in European deep tech and quantum? And that's to all of you.
Sorry to burst your bubble, but back in 1992, we did deep tech.
But different name, right? But it did exist, I agree.
Electronics, semiconductors, advanced materials, and technology was what we called it, snappily. Yep. At 3i, but it existed, and we did it. So if you want my opinion, Europe, 1600s to today, never been short of IP, never been short of smart people coming up with new ideas. 2026, actually, not short of examples of successful exploitation of IP. The bit in the middle where we're still going through the growing phases is kind of how do you get entrepreneurs to improve, VCs to improve, management teams to improve, and capital to improve. So we're still in that kind of chasing Silicon Valley in terms of that. But the trajectory we're on, IP, no doubt. Success stories, no doubt. We're just in a very exciting period where everything is getting better.
I think this is the primary example, as Roddy said, of the VC lottery. So needs a lot of capital, don't really even know what the addressable market is, not even really sure where the customer is, investing at TRL 4 or something super early. I mean, this is proper, you know, the lottery of VC. And therefore, and you would expect me to say this as a head of platform, the people that you invest in is the most important bit of it, because they're going to have to do a lot of thinking, be agile and resilient, and work out where this technology, where the amazing IP is, and I agree with you, there is amazing IP, where is it going to be deployed? And there will be 1, 2, or maybe 3 pivots along the way during the journey. So I think the quality of people that you put in there is really important. And there are quite a lot of success stories, but there are way less success stories in Europe than there are in the US or in China. And I think specifically with China and US, those who are successful then stay in region, whereas many of ours, because the exits are away from the UK, have gone. And so I would say it is the excellent people who've been there and done it before that we need to come back and help those who are in that moment of really capitalizing on something that is really exciting.
Yeah, I mean, well, I suppose we only invest in university spin-outs, and we started doing that back after the financial crash, where there was no money around and valuations were very low, and we thought that the tech was fantastic in university spin-outs, so we thought it was an opportunity, and that's when we set up the fund. And I think spin-outs have continued to be produced by UK universities. We've not really seen any drop-off, and actually the more successes we have, the more people want to spin out companies. It's unsurprising, really. And I guess on turning to quantum a little bit, I mean, what's it, probably 18, and nearly 2 years ago now, I think if you looked at the public markets in the US, the quantum companies were just ticking along at their SPAC price of about $10, and then suddenly in October 2024, it all took off. And suddenly we are now seeing probably one quantum spin out or trying to spin out a week coming to our doors saying, will you please fund us? So things have certainly changed a lot since our first investment in quantum, which was 2017, I think it was, yeah.
Yeah, I would also make an emphasis on Britain rather than Europe, because for quantum specifically, Britain is second only to the US in terms of number of quantum startups. And this is because in this country we had a national quantum computing program since 2014. So it's one of the first in the world. So the government already back then was investing about $1 billion. They have just renewed their commitment in March for $2 billion. And out of those $2 billion, $1 billion is direct for procurement. Again, trying to make Britain the first country in the world to use quantum computing at scale. Again, coming back to the listed companies in the US, if you look at some of the better known ones like IonQ, that's Oxford Ionics. If you look at Quantinuum, which will be the biggest IPO this year, that's that background in Cambridge. If you look at PsiQuantum, that's Bristol. So many of those companies have UK roots, and as been said, the UK has excellent universities which continue to produce those excellent startups. So that's why, I mean, we are focusing on Britain and supporting the hubs in this country, which government very wisely supporting. And for example, UK National Quantum Computing Centre has a 10-year government commitment that's almost unprecedented.
Thanks so much for all of that. So one term, of course, that's come up a lot and is a key part of deep tech is IP, and a large part of the IP that seeds these deep tech opportunities comes from universities, right? So a large part of this are spin-outs. So Neil, could you tell us a little bit about the quality of the UK spin-out pipeline today, and perhaps help us paint a picture about where there are gaps between what is spinning out and what is investable?
Yeah, well, I guess the UK has done a pretty good job, especially with the Golden Triangle, where they've been doing it for a while, spinning out companies. So if you look at Cambridge University, it's got a tech transfer office which specializes in spinning out companies. They've probably got over 100 people in that department. Oxford has a similar thing, so does Imperial, UCL. So these companies, these universities have done it for a long time. I was recently at another conference, and I think there were 150 other tech transfer offices trying to be set up around the country, trying to do the same thing. But it takes a lot of work. But you need that tech transfer office to be able to sort of take the idea from a professor or a PhD student and turn it into an investor proposition. And that's quite a lot of work. And now there are a number of different funds who will help with that in terms of doing proof of concept funding for about sort of 100 grand. Because you've really got to come to a VC with a pretty well thought out plan. Even though there are lots of things that can go wrong and things that are unknown, I mean, you're going to get asked questions about whether you think there's a market for your products, how long it's going to take, what's the cost involved, how many people you need to employ, where the market is. So if you've not gone through that thought process and you come to a venture capitalist, you're not going to get invested. So you do need to do the work before you turn up at a venture capital company, I think.
Yeah, really clear. Maybe for you, Kirill, let's bring it back closer to Quantum. I think Quantum has had many different sort of ups and downs and hype moments, and arguably we're in quite a hyped moment today. The market has changed enormously over the past 12 months with companies going public, like you mentioned, and more M&A activity. So could you tell us a little bit about where we are today, in your opinion, and how Quantum Exponential kind of takes into account these cycles and mitigates the risk of them and the impact on the broader quantum industry?
Yeah, as you say, I wouldn't call it hype, but investors are certainly excited. And if you look at the money flown into quantum last year, it was above 10 billion, which is 5 or 6-fold increase from the prior year. Now, why is this happening? It's because now there are commercial case studies, or rather use cases in the big industries. So first of all, theoretically, quantum computing is specifically well suited for a couple of applications. So for example, it's Hamiltonian simulations, meaning simulating molecules, or it's differential equations, so you could use it for fluidics or for aerodynamics, or it is optimization tasks. So on those three tasks, quantum computing theoretically has always been known is expected to outperform your classical computer. Now, that translates into certain sectors. So for example, if it's molecules, it's healthcare. Healthcare, according to McKinsey, is something like 400 billion potential opportunity for quantum. And last year, we had two big cases I know of. For example, AstraZeneca was, I think, June last year, and then Moderna in July, which came up saying that we were able to model a new molecule or a new vaccine using a quantum computer. Of course, they don't have their own quantum computer. They used, I think, Quantinuum in one case and IBM in the other case. And then the other big task is optimization. Optimization is, again, translated to many sectors, but the biggest pool of money is in finance. And then you have HSBC, famously in September, said that now we've used quantum for optimization of our fixed trading. It may be questionable in terms of, how much data it was there, but it was real application with a potentially trillion markets being disrupted. And of course, you have security, which is even bigger opportunity. And again, you had, for example, JP Morgan using the Quantinuum machine for encryption, or Boeing just announcing that they are launching an entanglement satellite for the electoral integrity. So real big companies. I think IBM has the biggest portfolio of those case studies. It's something like more than 300 companies, big corporate users are using on quantum, and suddenly, one by one, they started appearing, and these are the industries which theoretically we knew that quantum would be disrupting, but now it's actually happening. That's why money followed. And of course, there are also the government efforts, as I say, from the UK with their 2 billion, but also US put it on top of their federal R&D agenda for 2027. It was part of their national security strategy. EU is coming up with their Quantum Act this year. China is, of course, put it on top of their 5-year plan, spending more than UK and US combined. So it's all this combination of government money and commercial case studies which led to the investor excitement. So I wouldn't call it a hype. I would call it the early use cases in a very, very useful, potentially big industries.
Thank you for that. So it's arguably an interesting example of a field that started with extremely high technical risk that's now finally falling into its real-life applications and business value. And about this technical and scientific risk, evaluating it, underwriting it, is a key part of the decision-making as an investor in deep tech. So, Stuart, could you tell us a little bit about how you guys think about that at Molten, and what are some of the challenges with trying to, quantify this scientific risk?
So let's push this to the ridiculous. We don't do any. And what I mean by that is that if you're trying to invest in deep tech, in 35 years of investing, the amount of times I've invested in something and it just doesn't work is so very, very rare. Versus, I get the wrong time cycle and I'm bust before the thing goes to market, or the deep tech, which is going to transform an industry, transforms 2% of a niche, and so it's just not big enough. So if actually, why would I waste my time proving it's going to work? Proving this, underwrite the science risk. The other reason is actually I don't want to fundamentally prove that I'm right in my investment decision. Weirdly, because I'm trying to back something that's trying to change something, I actually want to find arguments. I actually want to find the incumbents telling me that chocolate ice cream is not going to work because vanilla ice cream is the only ice cream that's going to be there, right? I want the market to tell me why it won't work, because then the people I back will tell me why they got it wrong. Tim Draper was a mentor of mine for a number of years, and he's as annoying as hell, to be honest, as a partner, just being, Chapman House rules there. But he would always say, don't tell me the 99 reasons the thing will fail. Tell me the one reason it will succeed. And actually in deep tech investing, that becomes way more important than diligence in the arse of something to prove that you're really clever, to actually trying to find the true understanding of the risk you're taking and the opportunity if it works. So to answer your question, we don't do any.
No, that's a great way to think about it. Thanks, Stuart. Anything to add on that point, Joanne?
The numbers in VC are half of what you back will go bust. Maybe, I think the stats from the States is 1 in 80 will be a fund returner and will smash it out the park. I think so, I'm the same view as you. You have to take a good amount of risk. If you don't have half of your stuff going bust, and all the investors in here will know that only too well, you're not taking enough risk, which is a conversation that we regularly have. So you're right, you're not going to know everything. Those are the odds that we work on. And so if that's not what's happening, then your risk appetite is not as big as it should be. And certainly there's plenty of opportunity in this sector to push it as far as you'd like to push it.
Thanks so much for that. Could you tell us a little bit about some of the specificities of the ecosystem that you work in? So you're focused on a geographical area, right? Which comes with some advantages and some disadvantages, I imagine. Tell us a little bit about your land up north.
I keep hoping somewhere during today and everything I've been in, I'll hear the words Manchester or Leeds or Sheffield or Liverpool mentioned, but I haven't made it so far, so this is the first time. Just a few stats, really. Those are the universities that we have a preferential deal with, and we see everything that comes out of there and have an option. So those universities together have more than 16,000 researchers and academic staff, which is more than Oxford and Cambridge put together. Like Oxford and Cambridge, 90% of the research that they do is classed as excellent or world leading. It's of a similar caliber to that. There are plenty of opportunities and reasons why this is an amazing, rich seam of IP-rich opportunities. And Parkwalk, who've been doing this for a lot longer than us, will know that there are, there's plenty of stuff there. So I think the raw material is all there in absolute spades. I think last year Cambridge had a bit of a blip in the number of spin-outs in IP-rich. So actually the 4 universities are greater than those 2 universities for the last 12 months. It's a bit of a blip, so we'll just take it for these last 12 months. I think what that shows you is it is all there. But if you go back 4 years, the seed rounds that were raised in the North were substantially lower than the UK average. And you go to 4 years later to where you are now, they are still a smidgen lower than the UK average. But the ones that we're involved in and where we've done and worked with Parkwalk often, the pre-seed funding and a little bit of help to get them across that valley, the ones where we've invested and are leading, the seed rounds are greater than the average for the UK. So everything is there in spades. It is an amazing opportunity, and I'd love to be able to come here next year and us talk about universities, and Manchester or Sheffield be up there, with all the other ones that we're talking about. We can only hope, can't we? I think the only thing that is missing is the track record and the ambition. So we don't have Organox or Oxford Ionics. We don't have Dark Trace, we don't have Abcam, we don't have any of those, so that people can listen to others and say, well, if they did it, I can do it, it's going to be okay. And that inspiration and ambition that you get from seeing others who have come from exactly where you were and doing it is something that is missing. And that relies on the TTOs, relies on us to continually put in place programs where we can give access to potential first-time founders to see what that looks like. Certainly University of Manchester is really active. We have a bootcamp program and NG Studios program. So I think, everything is there, all the raw materials are there, everybody is pulling together to create that ecosystem, but I would like it to be a little further up the agenda than where it currently is.
Well, now everyone's heard the message today, so that's great. Now, another topic that comes up a lot in Deeptech and Quantum is the role of public funding. Certainly in Quantonation's portfolio, a majority of our companies benefit from European or local public funding via grants or sometimes direct equity investment. And the UK in particular helps a lot with UKRI programs, the National Quantum Programme. There's often a debate in the VC world about how good of a thing this is. So to all of you, what are the advantages and potentially some of the limitations or risks when a lot of early stage companies in the sector benefit from public funding like this?
We started in 2017 back in these companies, and there weren't many people investing in quantum at that point in time. You probably get from the panel here that investing in this sector is a lot of syndication. So we invest alongside Northern Gritstone. In Oxford, we invest alongside OSC. Up in Cambridge, alongside CIC, because Deeptech is a long journey, and it takes a lot of money, and you don't want to be the only one around the table, the cap table, who's got to put your hand in your pocket. So, to be honest, so everyone starts syndicating, and that's a good thing. But then you're looking for other monies, and if you're into sort of quantum, which is obviously very scientific, and when we invested it was very early, people were having like 4 qubits or something. It's not really going to do very much, but it's just proving a concept. You need some money from somewhere, and so the UK did a really good job, as you mentioned, with the National Quantum Computing Centre. But if you look at most of the companies that we're in our portfolio now, they've all got European locations, so they've all got US locations, so they're now taking advantage of European funding and US funding. And I mean, unfortunately, as we all know, the US will sort of outfund us by a factor of 10 or more. And so if you look at their DARPA program at the moment, they're going to be putting a lot of money into this thing called Stage C, where companies could be getting like 300 million per company to exploit their technology. So you have to be there really if you want to go on this journey and creating a sort of full stack quantum computer.
Yeah, I would say the government support is important, and your fund, Contination, is a great example. I don't think I would reveal any big secret saying that you had investment from BPI France as a seed, and that attracted something like four multiple on private investments. And now for your second fund, of course, you have the EIF, I think, which, of course, will attract even more capital. And as a specialist, so basically, the public money attracts, let's say, 4 times the private capital, and then being a specialist, you attract probably as much 4 or 5 multiple for generalist investors. So it's really important to support your domestic specialist funds because that is a multiplier, and it's a multiplier on a multiplier. So unfortunately, we don't have that in the UK. Of course, we have British Business Bank who started investing in quantum. At the moment, they prefer to do it directly. So, for example, they're co-investing in one of our company called Oxford Quantum Circuits. But we do need more domestic funds, more government support, and in this case, French example is fantastic.
Any other comments? What are some of the risks? There are some people that say you get these, zombie companies that are only surviving by government funding. Is that a view you've thought about, or?
I mean, in many respects, we should be absolutely thrilled that there is public money there and that is able to support these businesses, who it is challenging in the early days. So I feel we should be thankful and appreciative of wherever the money comes from. And I don't think it being public is anything to the detriment of a business, whether it has public or private. The issue comes, I think, with the grant funding mindset. So I think when you then get private money in, there are additional milestones, commercial necessities. There is a need to demonstrate your return on investment. It therefore means that different people are employed alongside those exceptionally bright people who are developing the IP to make it more commercial and to drive those milestones. And that's what the private money does, because that's the demand that the private money puts on it. I think the challenge of when it's grant funding is that the same mentalities and behaviours that existed while they were perhaps still in the university, where research by necessity has to take more time and is a little slower and more diligent in the way it's done. So I don't have any problem with it, but I think the benefit of mixing the public and the private together is you do get the change in mindset and the change in the requirements of delivering and reaching those milestones and the return on investment.
I hate it. Principally because it just corrupts the board table discussion. 45 minutes on what are the restrictions and what are the goals and what do we have to actually produce and how many people do we have to manage it. It's just 45 minutes away from what makes this company successful. Now, I will counter what I've just said. Quantum has made me change a little bit of that opinion, certainly with my experience of the DARPA QBI program, where the 96 PhD qualified staff that they hired to rip these companies to bits to get them from stage A to stage B and then into stage D is that's commercial. I mean, they are the furthest thing away from civil servants that I've ever seen in my life. So maybe I will eat my hat and say that I got it wrong, but I believe if public money is involved, the more it can be commercial, i.e. we are giving you this money for a reason, and if you fail, I'll turn it off, as opposed to no, I'll give you some more. Then there's and maybe quantum has been that catalyst. Maybe other people will see how the quantum programs are working and actually drive an outcomes and will adopt that in public money.
And normally you would have government come in at earlier stage and be in the seed and a multiplier. So I spoke already about the need to support the domestic funds to attract generalist capital. But even in the earlier stages, the grants, government contracts are important. So if you look, for example, at the largest publicly listed quantum computing company called IonQ, they have probably revenue 130 million, out of which 52 is a defense contract. And they may have overstated it, by the way, because it's probably not 52, but 12. But anyway, it's another story. But this is how normally it works. You have government and especially defense being the early buy of technologies, and that's how great technologies like telecoms, like internet developed, and then you find commercial buyers coming in at a later stage, and that's when it really takes off. But you do need a government at the earlier stage.
Yeah, I think it's a difference between a grant and a procurement program. A procurement program is very different. It's the whole mindset is different, I think, and that's where we've moved to now in the quantum area, which I think is really good.
Yeah, thanks for that. Great opinions. I'd like to, before we wrap up, we've got a few minutes left, bring us back to sort of the fundamental structure of venture capital, right? The timelines that the industry works with, the funding cycles. Some people question as to whether VC as it is today is the appropriate structure to successfully finance and grow deep tech companies. What do you think?
It's a weird industry. So at the, let's say I've closed 20 funds over my 35 years in venture capital, okay? So at the point you close that fund, you and your lawyer know that you will breach the 10-year term. The LP and the LP's lawyer will know that you will breach the 10-year term, and you merrily just sign and shake hands. Even when you get married, you expect it to last. You know, you don't expect to breach it. It's like, it's the most weirdest. I mean, and the Molten is public for that is one of the reasons, which it's, it's structured wrong. And it's structured the way it has been since the 1956 REITs that were taken from the real estate market in New York and moved over to San Francisco because they were only vehicle that paid carry, is because they're rich. 2 and 20 works for GPs. And so I think fundamentally it is wrong. Now in the US, the average life of a fund to shut it at 17 years on a 10-year life fund. Right? So why is that acceptable? Well, because the 1 in 80 liquidity means it pays back the fund, and so all the LPs are doing is just rolling over, kind of future profits. So they just turn a blind eye to it. Personally, I think it's weird. Just weird how it's been allowed to exist for the last 70 years.
We're lucky we don't have a JPLP structure and we have shareholders and a balance sheet. So, yeah, I'm probably not the one to comment on this.
We don't either, because we're an EIS fund, so people would like their money back on 3 years and 1 day, if possible. That's not going to happen with a quantum investment, I can tell them that much. So, but ours is an evergreen fund, so again, we've got time on our side. So.
Yeah, I mean, I agree with Stuart, because you basically need to know what you're doing, because it's VC. VC are risky. This is the deep end of tech, so therefore inherently more risky. It's primarily hardware, which is even more risky, so it's a lot of risk. But as we all know, risk is theoretically proportional to the return you could potentially make in this investment.
I mean, there's lots of chat now about the current structure, about where the gap is in the middle of where those with the deepest pockets are going to come, and why we lose our value capture to the US and all of those things. I just take it back to what we're supposed to be doing as VC firms, and that is to create amazing show-stopping startups. And the head of platform role that I have, we were in San Francisco not long ago, is super common over there, and there's loads of people that are operators or experts that go in to build teams, to help people learn how to sell, to build better syndicates together, to open doors for them, to do BD for them. If you globalize or you go international very quickly, your revenue trajectory is twice as great as it would be if you stayed in the UK. It's kind of a no-brainer. So how do you open those doors internationally for them as well? And I think if we do have to take it back down to, the tech is unlikely to fail, so you need a great team and they need to learn how to sell stuff. And I think we can talk about the about the structure, and I am new in the last few years to VC, so certainly not the one to do that. But I think if we continue to churn out an amazing product and we continue to churn out really super exciting companies, then we'll probably get away with the fact that you haven't delivered your money back in 10 years, or the fact that our shareholders want to sell their shares. So that's what I think. We just focus on creating amazing businesses.
I think that's a great takeaway. Thank you, Joanne. To wrap up today, now some people don't like this question. There's a little bit of a debate. You know, do you form sort of theses on topics, or do you just act much more opportunistically and only react to the best founders and startups? But I think for our audience here today, it's always fun to hear about some subtopics and subsectors, right? Some things that we can all get excited about and dream about and Google later on tonight. So could you please all give us one deep tech or quantum subsector or area that you're excited about, and maybe quickly explain why?
No. So I'm on the board of Riverlane, which I think is brilliant. And the investment thesis for me in this very technical panel is I think you've got to get closer to the customer. You can have the greatest minds to create the thing, but ultimately it's got to be usable. And quantum is one of those ones where there will need to be multiple bridges, built from the modality to the end customer. So if you want to know where and what we do invent, I have a partner in Molten, Kirill, who's completely technical and completely scientific, so I am the opposite end to him. I am much more interested in how does this arrive at the customer's doorstep? How does he pay me for this? And how do I facilitate what he's trying to achieve? So I think as we've spent 20 years here in quantum investing, that's where I'm focused.
I'm going to go into deep tech as kind of as a bit of a climate activist. So I think we've probably all got very miserable about the fact that the temperature is rising, and so therefore I think VC money has switched away from any technologies to do with mitigation and moved towards technologies to do with adaptation. So yesterday, Isotope, one of our portfolio companies, raised another round. That is a liquid cooling company. So I think we all accept there is immense pressure on electricity. Nothing is going to change. The temperature is going to continue to rise. And another company within our portfolio, Cytotrait, which is an adapted seed using, I'm not technical, so I'm not going to try and explain, but using gene editing to change that seed so it's able to grow in those areas which obviously are more drought-ridden. So I'm going to go, and it's about 10 years behind, I think, the investment in mitigation versus adaptation, which is where it's going to now. So I'm going to go with climate adaptation.
Well, we don't really do themes. We sort of, people come in and present to us and we go, well, that sounds like a good idea. So
that's us as well.
Yeah.
From one of our universities, yes, okay, great.
Yeah. But I guess when you sort of look at the UK in general, robotics seems to be an area at the moment which is we seem to be pretty good at. So trying to leverage off that, I think, is one thing. And I was in the medtech review before this, and we've got some medtech on portfolio, and we struggle with all the things that were talked about then about trying to get your product into the NHS and then going overseas and trying to get FDA approval and the long time it takes. But actually what we found is we can apply human medtech to animals, and people now spend as much on their pets as they do on their children. So basically, it used to be the case whereas if your sort of animal was getting towards the end of life, you'd have them put down. Now they people spend a fortune on sort of cancer treatments and everything else, and the regulation is much less than for human beings. So there's a huge market there, which is growing rapidly. So we're taking quite a lot of our stuff and applying it to the animal market as opposed to the human market, which is interesting.
Thanks. And to wrap up today, Kirill?
Good guess. We only do quantum, so I have no choice. I have to say quantum computing, but I'll tell you more. I'll tell you the company, which one will be the next more than unicorn. What do you call a $1 trillion company? What? Exactly that. And so Oxford Quantum Circuits. And why? Because Jason Huang said that. When he came on the trip to the UK, when that famous UK-US tech deal was signed, he said Oxford Quantum Circuits is the next NVIDIA. In fact, they deploy now their hardware jointly in a commercial data center in New York. So it's NVIDIA, Oxford Quantum Circuits, Digital Realty Data Center. Just go and watch that video. It's amazing because it's like dream come true. British technology deployed in a US data center for commercial use, for enterprise use at scale. I mean, they've been visited by the king, by the deputy prime minister. So that's the one, I think.
Thanks so much. And I think with that, that's a wrap. Thank you, everyone. Thank you to all the panelists.